For centuries, the world of real estate investing has been a private club, open only to the wealthy. But what if that club was about to be blown wide open? What if you could buy a house with Bitcoin, or own a piece of a Manhattan skyscraper for just $100? Welcome to Generational Wealth, your pathway from knowledge to legacy. This isn't some sci-fi concept. It's the future of real estate, and it's happening right now. For decades, property investing has been slow, expensive, and locked behind impossibly high walls for most people. But two key crypto innovations, direct digital payments and something called tokenization, are starting to tear those walls down. Here's how cryptocurrency is completely overhauling the real estate market. Let's face it, the traditional real estate system is stuck in the past. Buying a property is a nightmare of paperwork, endless middlemen like banks and lawyers, and fees that chip away at your investment. The whole process can take weeks, even months to close. For international buyers, it's even worse, with frustrating wire transfer delays and currency exchange headaches. This makes real estate one of the most illiquid assets on the planet, hard to buy, and even harder to sell quickly. But the biggest problem? The massive barrier to entry. Unless you've got a huge down payment and a perfect credit score, owning a piece of high-value property has been little more than a dream. This system has locked out millions of potential investors, concentrating wealth in the hands of a few. But that's all beginning to change. The first major shift is the ability to buy property directly with cryptocurrencies. In 2025, it's increasingly possible to purchase a home using Bitcoin, Ethereum, or stablecoins, especially in crypto-friendly hubs like Miami, Dubai, and parts of Europe. High-profile luxury sales have already been completed entirely in Bitcoin, proving the concept works. The benefits are obvious. Crypto payments can settle in minutes, not days, which helps speed things up. The fees are often lower too, especially for cross-border deals. However, it isn't quite as simple as buying a coffee just yet. The whole real estate closing process, with its legal steps and title checks, still takes time. Plus, the seller has to be willing to accept crypto. The price volatility of some coins can be a risk, and the tax implications are complicated. This method is powerful, but it's only one half of the revolution. The second, and arguably more profound shift, is real estate tokenization. This is the innovation that lets you own a piece of that skyscraper for $100. Here's how it works. An ownership stake in a property is converted into digital tokens on a blockchain. Think of it like buying shares of a company. But instead of a company, you're buying a piece of a tangible building. This process, called fractional ownership, is opening the door to democratizing real estate investment. It breaks down the high barrier to entry, allowing people from anywhere to invest in high-value properties with a small amount of capital. Suddenly, you don't need millions to be a real estate investor. You can start with what you can afford and diversify your portfolio across different properties. If you think this glimpse into the future of investing is as fascinating as I do, make sure you hit that subscribe button. We're breaking down how these technologies are changing finance every day, and you won't want to miss what's coming next. For trending topics and actionable crypto insights, join our Insiders Club on our website at GenerationalWealth.biz. So how does tokenization actually work? It all runs on smart contracts. Self-executing code on a blockchain that automates much of the process. These contracts can handle everything from distributing rental income directly to token holders to managing ownership records with perfect transparency. This automation drastically reduces the need for some costly intermediaries, which can lead to significant savings on transaction costs. But the biggest benefit is liquidity. Unlike traditional real estate, these tokens can be traded on secondary markets, much like a stock exchange. This means you could sell your share of a property in minutes, not months, giving real estate an unprecedented level of flexibility. Pioneers in this space, like Realty and Zonix, are already turning what was once a rigid, illiquid asset into a dynamic and tradable one. Combining direct crypto payments with tokenized ownership paints a stunning vision for the future, a global, liquid, and accessible real estate market. We're talking about a world where you can buy a fraction of a Tokyo apartment, a share of a London office building, and a piece of a vacation home in Bali, all from your laptop. Institutional investors are already taking notice, with billions flowing into tokenized assets. But it's important to keep things in perspective. The biggest hurdles right now are regulation and security. Governments are still figuring out how to classify and tax these new digital assets, which creates uncertainty. ensuring that smart contracts are secure and that platforms are compliant with anti-money laundering (AML). And know your customer (KYC) rules is absolutely critical to protect investors. The future of real estate is becoming digital. The slow, exclusive, and paper-based system of the past is being disrupted by two powerful forces: the speed of direct crypto payments and the access granted by tokenized fractional ownership. While regulatory questions still need answers, the direction is clear. We are moving towards a world where real estate investment is no longer just a privilege for the wealthy, but an opportunity for everyone. This transformation isn't a matter of if, but how quickly it will reshape the market as we know it. Quick disclaimer: I'm not a licensed financial advisor. This is for educational purposes only. Crypto is volatile. Never invest more than you can afford to lose. Do your own research. Thank you for watching. We appreciate your support. See you on the next one.